The accounting equations that we're using by chapter for the Nobles book. The Chapter 1 accounting equation is the basic accounting equation. Assets are equal to liabilities plus owner's equity. Or to put it more colloquial terms, what we have is equal to what we owe and what we own. There's only two sources for our assets or what we have. Either we owe on it or we own it right out. The assets are on the left side of the equation and the liabilities and owner's equity accounts are on the right side of the equation. The asset or right side of the equation can said to be debit based and the right side or the liabilities and owner's equity accounts can be said to be credit based. Therefore, assets increase with the debit, and we see some of the assets we learned about in Chapter 1. They're increasing with the debit. Conversely, we can see with the liabilities, the accounts payable that we learned about in Chapter 1, it's increasing with the credit. The same with common stock, which is found under the owner's equity accounts. It's increasing with the credit. Retained earnings, which also increase owner's equity, increase with the credit. Dividends, which decrease owner's equity, effectively by using a debit in order to show any increases in dividends, effectively we are reducing the credit-based owner's equity. Revenue increases with the credit, and so therefore it increases owner's equity. Expenses increase with the debit, effectively decreasing owner's equity. Now, a word about our financial statements. Assets are only found on the balance sheet. That's the only place where you will find an asset. The same can be said for liabilities. Liabilities will only be found on the balance sheet. However, the owner's equity accounts can be found on a variety of financial statements. Common stock will only be found on the balance sheet. However, retained earnings, the ending balance of retained earnings that we calculate for the period, it will be found on the balance sheet as well as the statement of retained earnings. So ending retained earnings found in both financial statements. This is the only account for which this holds true. Dividends will only be found on the statement of retained earnings. Revenue will only be found on the income statement, and expenses will only be found on the income statement. Now let's look at journal entries. When we learned about journal entries in Chapter 2, we expanded the different types of assets that we learned about, but we can see that each one of them is increased with a debit. And also, too, we learned about other new types of liabilities, but we can see each one of them are increased with a credit. Owner's equity, we learned that they increase with a credit for common stock. Retained earnings increases with a credit. Dividends increase with the debit. Sales or revenue increase with the credit, and expenses increase with the debit. Again, common stock only on the balance sheet, retained earnings, balance sheet and statement of retained earnings, dividend, statement of retained earnings, income and expenses only found on the income statement. Next, we learned about adjusting journal entries and closing entries. And we learned about a new type of account called accumulated depreciation, which is a contra asset account, and it is associated with a particular account. It is contra to that account. Since it is contra to that account, its normal balance is the opposite of the normal balance with the account with which it is associated. So since this is associated with long-term assets, and the example we have here is of equipment, which is increased with the debit, so our increases to accumulated depreciation will be increased with the credit. And we also learned about depreciation expense. It is also found on the income statement and increases with the debit. Next, we learned about retail and inventory. We learned about the various retail accounts. And so we had inventory as an asset which we added in this chapter, and it is debit based. And we also learned about some contra sales accounts. We learned about sales discounts and sales returns and allowances. Those are contra to revenue. And so since revenue and sales are typically, or are rather, not typically, but they are credit based, sales discounts and sales allowances will be debit based. We also learned about cost of goods sold, which is the cost of the merchandise that we purchased and then sold. So this is what it cost us to purchase it. It is an expense on the income statement, and it increases with the debit. found on the income statement. Next, we learned about cash. We learned about petty cash. It is a asset that is increased with a debit. And we learned about cash over and short, which is found on the income statement. Accounts receivable we learned about next, and we learned about the allowance for doubtful accounts, which is a contra asset account for accounts receivable. So since accounts receivable is debit based, allowance for doubtful accounts is going to be credit based, or its normal balance is a credit balance. And we learned about bad debt expense, which is an expense on the income statement and increases with the debit. Next, we learned about more long-term assets, more different types of long-term asset categories. And we also learned about amortization expense, which is for intangibles. It's an expense on the income statement, increases with the debit. And then we learned about other revenues and expenses, specifically gains and losses on asset disposals, both of which are found on the income statement. Since a loss decreases owner's capital, or owner's equity rather, it's going to be debit based. And since gains on asset disposals increase owner's equity, it's going to be credit based. Next, we learned about current liabilities, and we learned about accruals, payables, and liabilities, all of which are liabilities that increase with a credit. And we also learned about interest expense, which is an expense on the income statement, and it increases with the debit. Next, we learned about long-term liabilities, specifically bonds. So we learned about bonds payable. We learned about the contra asset discount on bonds payable, and we learned about premium on bonds payable, which is found on the balance sheet next to bonds payable, but it increases bonds payable, and we explained this throughout the lecture. Next, we also learned about losses on bond retirement and gains on bond retirement. This is also under other revenues and expenses under that section of the income statement. A loss decreases owner's equity, so it's debit based. A gain increases owner's equity, so it's going to be credit based. Next, we learned about a variety of new accounts under corporations. We learned about preferred stock. We learned about paid-in capital in excess of par, treasury stock. All of these are credit-based. We learned about, we'd already learned about retained earnings and dividends. And we also learned about dividends payable. So we also learned about a new liability when we're paying out a dividend, dividends payable.